Good day, my name is Kmot. This podcast is brought to you by Majuba TVET College and specifically relates to financial accounting and 5 for South African TVET colleges. In this presentation, I'd like to focus on partnerships and I'd like us to tackle the current account. I'd like us to look at the question paper which was written on 22nd of November 2016. And question 1, requirement 1.2 to be specific, candidates were required to prepare the note to the balance sheet for the current accounts of the partners. Without wasting your time, I'd like to take you to the structure of the note to the current account. That's notes to the current account for KCO for the year ended 29 February 2016. It's important that you tell the users what the note relates to. In this case, it relates to the current account. The current account as a balance sheet item, and it relates to KCO. KCO is the partnership. And the current year of assessment is 29 of February 2016. I'd like to emphasize that each note to the annual financial statement, for ease of reference, contain a note number. It's entirely up to the student to use whatever note number they want, as the note number is not prescriptive. As you can see, firstly, I want to bring to your attention the fact that the note to the current account has columns. If you contrast this to the current account in the form of a T account, the T account will consist of a debit side and a credit side. However, as I've mentioned, the note to the current account consists of columns. The first column relates to descriptions of items that are taken into account in preparation of the current account. The second column relates to a specific partner. This column relates to Kite, who is one of the partners in the partnership. The next column relates to Corey, who is also a partner in the partnership. I'd like to mention the fact that if we had more than 2 partners, each and every partner would have their own separate column in the note to the current account. I'd also like to emphasize the fact that the note to the current account does not contain the total column. The reason I'm specifying this is that I noted that most candidates, when they're required to do the note to the current account, they also include the total column. It's actually time consuming for the purpose of exams, as you do not earn marks for the total column because total column is not part of the note to the current account. Moving along swiftly, I want to highlight the fact that items that makes the current account are normally found under what we refer to as the partnership agreement. I quickly want to go to the partnership agreement as per 2016 question paper. The wording highlight, okay, didn't highlight it, there you go. The partnership agreement. The partnership agreement consists of what we call provisions. Provisions of the partnership agreement, all those are provisions, will be taken into account in preparation of the partners' current accounts. Just a quick recap on the current account. If you are required to do the T account, remember it will have a debit and a credit balance. The purpose of the current account in regards to partnerships, the current account reflects the partners. A debit balance indicates that the share of the partner in a partnership is reducing. As you know that if you have shares, for argument's sake, in a company, the value can either increase or decrease. The same logic applies to partnerships. The share of interest of each partner is reflected in the current account and it can either increase or decrease. As I mentioned, if you're required to do the T account, the debit reflects a decrease in such share partner's share interest, and the credit indicates an increment. Okay, without wasting your time, I'd like us to look at the partnership agreement once more again. The first item of the provisions of the partnership agreement relates specifically to Kite's salary. As I've mentioned, Kite's salary will be taken to the note to the current account. Kite is entitled to a salary. It would have been credited as it reflects an increase in Kite's interest in the partnership. Corey's salary, the same logic applies. It would have been reflected on the credit side. But remember, we're not going to take those amounts as they are. I'll refer you to the calculation slide as soon as I'm done with explaining the impact of the provisions of the partnership agreement on the current account. The interest on capital, it entitles the interest of 8% on the capital balances. Remember, this will be reflected as a credit in the current account as it increases the share of interest of a partner in a partnership. The next item is the current account. The current account, it works on a similar basis, except that it's important to clearly distinguish between a debit side of the current account and a credit side of a current account balance. If the balance is per the pre-adjusted trial balance, I quickly want to take you there. As you can see, Kite's balance had a debit side, so the interest on current account will be reflected on the debit side of Kite's current account because it reflects a decrease in Kite's share of interest in the partnership. And Corey's has a credit balance, therefore the interest on current account relating to Corey will be reflected on the credit side as it entitles Corey to an interest on current account since Corey has a favorable or a credit balance on the current account. Lastly, the share of profit will also be taken into account. I'd like to specify that if it's a loss, it will be taken to the debit side as it adversely impacts the partner's share of interest. If it's a credit, it's favorable to the partner and it will be taken to the credit side. The last item I'd like to discuss is the loan from Corey, which was not necessarily one of the provisions of the partnership. Corey borrowed the partnership some money, and therefore Corey is entitled to the interest on the loan. The interest on the loan favors Corey as a partner, and therefore the interest on the loan would have been reflected on the credit side of Corey's current account. Okay, let's quickly go back to the slide and let's see how the spreadsheet, how the slide looks like, the total, the slide without amounts, of course. So this still relates to the note to the current account. I decided to omit amounts because in the next slide, I'm going to show you how it looks like once we've calculated all amounts. The first item is balance at the beginning of the year. I think it's important that you understand that you have to start with the balance because this is also the note to the current account also serves as a reconciliation. So we want to communicate to the users of the financial statements. We want to communicate to the users of the financial statements how we got this amount, which is referred to as the balance at the beginning of the year, to be different from the balance at the end of the year. So we'll take into account items that either reduced the balance at the beginning of the year or increased the balance at the beginning of the year to arrive at the balance at the end of the year. I'd like to show you where we get the balances at the beginning of the year. I'm quickly gonna go to the question paper. If you look specifically at the pre-adjusted trial balance, the balance sheet section, the first amount you're given is capital relating to Kate. I'd like to emphasize that capital is not part of the current account. So capital does not affect the current account. The next item on the pre-adjusted trial balance is current accounts. We have the current account for Kate and current account for Corey. Those two amounts will be reflected under respective partners as they are referred to as balances at the beginning of the year. So we're going to reflect an amount of 7,880. Remember, it will have a negative sign on the current account because it has a debit balance. For Kate and for Corey, it will be 10,200. It will be taken to the current account. The other amount that will be taken to the current account, note to the current account, and that didn't have any adjustments. I'm not saying it's always like that. You always have to go to your additional information and determine whether there are any adjustments relating to drawings. So there weren't any adjustments relating to drawings. Remember, an interest on drawings is not necessarily an adjustment impacting drawings, but it's just a calculation on interest on drawings. However, to cut the story short, partners didn't make further drawings other than the drawing that is indicated at the beginning of the year. So we're going to take the amount as they are and post them to the note to the current account. So there we go. Drawings, I've discussed these two amounts. Those amounts we obtained directly from the pre-adjusted trial balance, and they are given. If there aren't any adjustments specifically relating to this item drawings, we're going to take the amount as is. The next item online is interest on capital. As per the partnership provisions, we're given the interest rate. We're going to apply the interest rate on the capital portion to determine the interest on capital for both partners. Without wasting any time, I quickly want to take you to the calculations of interest on capital. The interest on capital will be determined by taking the amount as per the trial balance. For Kite, we were given an amount of 264,000. Please note there's an extra zero there, apologies. And then we're going to apply the percentage of 8% as provided as per the partnership's agreement. We're going to multiply the 264,000 by the 8%, and we're going to obtain an amount of 21,000, which we're going to take to the note to the current account. This amount specifically relates to Kite. We're going to perform the same calculation for Corey. However, I need to emphasize that we're going to take the balance of the capital specifically relating to Corey. We're still going to utilize the 8% as it relates to all partners. And once we multiply Corey's capital amount as per the trial balance and the 8%, we'll arrive at Corey's interest on capital. The same thought process applies to the calculation of interest on current account. I'd also like to look at Kite, and please apply the same logic in determining Corey's interest on current account. The interest on current account, it's calculated on the given current account as per the trial balance. Remember, Corey's was on a debit side, so it would have a negative balance. So we're going to take the amount of 7,880 and apply the 7.5% as provided in the partnership's agreement. We'll arrive at an amount of 591, which will be posted to the note to the current account, to the column specifically relating to Kite. As I've mentioned, the same thought process applies in determination of the interest on current account relating to Corey. We're going to substitute that amount by the current account amount as provided by the trial balance, and we're going to multiply it by 7.5 to determine Corey's interest on current account. The next item I'd like to tackle is salaries. If you refer to the partnership agreement, the first provision related to Kite's salary, we were specifically told that Kite is entitled to a salary of 90,000 per annum. As per the trial balance, we were given the amount of 60,000. What this entails is that the 60,000 has already been taken into account. Therefore, we're going to take the difference between what the partner is entitled to on an annual basis and deduct the amount that has been provided for as per the trial balance, and the remainder will be taken to the current account. Remember, a Kite is entitled to earn 30,000, which has not been accounted for. This amount will be taken to the credit side of the current account. It is favorable to Kite, and it will be taken to the column of Kite in the note to the current account. Moving along swiftly, now I'd like to deal with the determination of Corey's amount that will be taken to the current account. The same explanation applies in the sense that we'll commence by assessing the annual salary that Corey is entitled to. Corey is entitled to 72,000. Remember, we had to calculate the 72,000. It wasn't given. The calculation is not difficult. We take the 6,000 as provided in the partnership agreement. We multiply it by 12 months to determine the annual amount. We're going to take the amount as provided per the trial balance relating to Corey's salary. The amount was 60,000. We're going to take the 72,000, deduct the 70. We're going to take the 72, deduct the 60,000. We still need to reflect the amount of 12,000 in Corey's current account on the credit side, to be specific, as it favors Corey. 12,000 will also be taken to the note to the current account. Okay, let me go back a little. Now I want to show you the end product relating to the current account. Once you're done with your calculations, your note to the current account relating to the partners should look like this. You will have the balance at the beginning of the year. I've already dealt with those items. I've mentioned that we obtained them from the pre-adjusted trial balance. We did a calculation of interest on capital. We did a calculation of interest on current account, and in a previous presentation specifically relating to the income statement, I did a calculation relating to the interest on loan. Remember, the interest on loan should be taken into account in compiling Corey's note to the current account, because Corey was entitled to the interest on loan. Corey borrowed money. As a result, he was entitled to the interest on loan. The interest on loan has not been taken into account as per the pre-adjusted trial balance, because we're not given any amount specifically relating to interest on loan as per the nominal section of the pre-adjusted trial balance. I did the calculation relating to salaries. I showed you where exactly we got the amount of drawings. Remember, both the amount of drawings will have a negative sign because they each have a debit side, and remember, a debit side is communicated with a minus in the note to the current account. In a previous presentation, I also did a split of loss for both partners. Remember, a loss will be taken to the debit side of the current account. A debit side is reflected with a negative in the note to the current account. I wanted to say a debit side will affect the current account. That is, if you're required to do the current account, it will affect the T account and it will be taken to the debit side. And for the purpose of the note to the current account, it will be reflected by a negative sign. The total comes to 25,000. How we arrive at the total? We're going to take the minus, we're going to add that amount, we're going to less that amount, we're going to add that amount, and less the two amounts to arrive at the balance at the end of the year for kite. We're going to apply the same thought process in determining the balance at the end of the year for Cory. I think this is where my presentation ends. If there are any questions, please feel free to use my cell number, or you can post your queries to my email address. Thank you.